Hi everyone, and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've certainly had the fallout from this French election. Markets risk appetite is certainly on. We've got Emmanuel Macron, who seems to be moving quite strongly towards the victory in the second round of the French presidential election against Marine Le Pen, and the runoff certainly seems to be fairly confidently moving in his direction due to the fact that he is the centrist candidate. You would have imagined that due to the turnout being quite high and also Marine Le Pen not doing as well as possibly had been expected in the first round, he should be able to push that through to victory in the second round. Now, markets are taking that as a risk appetite play because you've seen the euro strongly higher. Macron is a pro-European, pro-Eurozone candidate. He's looking for stability within the Eurozone, and that certainly has played out to pull the euro higher this morning. Also, gold is lower, and other factors such as French OATs are strengthening quite significantly. The bond yield spread between French OATs and German Bunds is sharply lower this morning, as you can see on this chart that I've got here. Now, we've also got a lot across the board on equity markets, really strong gains on the French CAC and also the DAX as well. DAX at an all-time high this morning, the French CAC multi-year highs as well. So really big reaction in all these markets this morning. Will it last? It's a question as to whether I think the politics continues to drag on as a driving factor. We've got, I suppose, a couple of weeks before the election of the second round. Maybe we'll see some continued momentum, but I think ultimately the market will quite quickly factor in that Macron will be the victor, and it could start to settle down quite quickly. So previously to that, you've seen treasury yields which have been falling away, and that has been a drag on equities. Certainly the 7-week downtrend on the S&P 500 and Wall Street certainly seem to be sort of reflective of that. Will yields continue to fall away? They've reacted higher today with the reduced risk appetite, but ultimately they could start to track lower again if this reflation trade continues to unwind. Certainly I think the treasury yields have a part to play in these markets, certainly with the dollar under pressure to the downside, and also equities as well. So that could still be playing out once the dust settles on this French presidential election. We've also got another election just around the corner in the UK. Seems to be that the announcement by Theresa May has created a large positioning back on the sterling as the short positions unwind quite quickly. Will that continue to pull higher? I think sterling is another interesting play. Now, in terms of your Forex markets this week, we've got the euro, as I said, which is strong. Now, not only is the euro strong with the French election, but also looking ahead, we've got the ECB this week. Will the ECB start to play a factor? Will they change the wording, and will the press conference be a little bit more hawkish going forward? It certainly seems as though that the inflation argument is not as strong as it was. Inflation coming off back to 1.5%, but we've got inflation again at the end of this week, expected to come a little bit higher again for the eurozone. Will that start to sort of play into the ECB's reckoning? I think it's a little bit early for the ECB to start talking about tapering asset purchases, and I think that the ECB is going to play it fairly steady hand this week. But what we do have is, as I said, the euro breaking out above 108.50. That is a key level on the long-term charts. I think on euro dollar, holding above that is a really positive move to the upside, can continue to pull the euro dollar higher. Now for cable, 127.75 is the key level to look out for. There's a bit of a support band between 127 127.75, and I think that if the cable can start to sort of build above there, then again I think we could push towards 130 in due course. Now for dollar yen, we've got a jump higher on Monday morning with this reduced with the reduction and a move away from the yen. Safe haven plays not in favour, and that's pulled dollar yen higher. Now will that continue to maintain support? The 110 spot 10 level to 111.60 I think is a resistance band. I think that we need to see dollar yen pulling through that level there to really engage the bulls once more. But for now, I think it's still a bit of a rebound trade that could start to find a bit of resistance. Now, in terms of your equity markets, sorry, gone one too far there. In terms of your equity markets, you've got the equities that, as I said, pulled strongly higher on Monday morning. Is this going to be the turnaround in the markets? I'm not convinced it will be, because I think that we could see just a fairly brief reaction to this French election before we start to focus elsewhere. The reflation trade seems to be a bit of a factor, with treasury yields on a downward trend. Even though we've seen treasury yields pulling higher on Monday, I don't necessarily think that's going to continue. 230 on the 10-year yield is a key level to look out for those treasuries. Now, I think below 230, I think that equity markets will be under pressure and looking more corrective, and I think that could be seen. Now, in terms of your S&P 500, it started. It has been in a downtrend, but it could now start to sort of break that downtrend. But will it last on the breakout? In terms of your DAX, I think a move above the 12,400 level into a new all-time high is interesting, but can it hold on to this breakout now? That would be the question traders will be asking themselves. For FTSE 100, it's sort of pulled up higher from the 7,100 key support. Needs to now pull above 7,255 as the resistance. For your commodity plays, I think gold has had a bit of a correction today as the French political risk has been reduced. That's taken out a little bit of the safe haven status from gold's bull run, but I think it's going to come into the support now between 1260 and 1270. That if that level can hold, I think the market will start to regain a bit of poise again. 1240 is a bit of a key support on the downside, but I think, as I said, if it can hold above 1260 to 1270, that's looking more positive again. And finally, for oil, we've seen a big sharp correction on oil in recent couple of weeks, and that's come as the US shale production has ramped up in the last few months, really, ever since May 2016. The US oil rig count has been rising. It's now well over double that level that it saw at the bottom of May 2016, and again we saw on last Friday. Now that's 14 weeks in a row we've seen the oil rig count increasing in the States. That's putting pressure on the oil price, and still sort of the WTI and Brent crude have been sort of moving lower. Now there's some supports that need to hold, but can those levels hold? And I think it'll be interesting to see whether the OPEC announcement or OPEC agreement is extended, but certainly for now the oil rig count in the States is the problem. So for looking forward on the key economic releases, as I said, we've got a bit of inflation this week. We've got the ECB, we've got the Bank of Japan. Those are the three factors to look out for. And not only that, on Friday we've got the growth for Q1 advanced numbers for the States, and that will be interesting because US numbers have been disappointing a touch recently, and we need to start to see that turning around again. But I think inflation for the Eurozone and Japan will be interesting. Obviously the ECB and the BOJ will be the main focus though. So I wish you good luck in your trading this week, and I will speak to you next time. Thank you.